Good afternoon, COVIDCAST JA viewers. Welcome to another episode of COVIDCAST. I think today is episode 21. And today we're talking about the game changer, tiered KYC. By the way, have you received your SME memo for this week? If you haven't, please email us at sme@psoj.org. And right at this hour too, if you have not yet registered for the conference, the PSOJ online conference, which is tomorrow morning at 9 a.m. Tomorrow morning, Friday, crossing the chasm, the road to recovery. I would be expecting that right now. You're emailing us at sme@psoj.org. We'll provide some greater details about the conference later on in the show. So today we're talking about the game changer, tiered KYC. And some of you are saying, what are we talking about with tiered KYC? Well, one of the important things too that we've recognized with our MSMEs is that it is important that we are properly banked. And many of our MSMEs complain that it is difficult to open accounts. And in fact, for individuals generally, there are several requirements for opening accounts. And there is rationale for that because we have various legislation that support the various requirements. But one of those critical pieces of the legislation, the Proceeds of Crimes Act, underwent a significant amendment at the end of last year. And we're going to be talking about the amendments to the Proceeds of Crimes Act and what that has done to affect tiered KYC. And I know all of you know what KYC is, know your customer. All the various questions that are asked, the documents that you're asked to provide for verification of who you are by your financial institutions. And today, we are joined by two bankers and the division chief for the Financial Institutions Supervisory Division at the Bank of Jamaica, Dr. Jide Lewis. So let me start with introducing Dr. Lewis. Dr. Lewis is a graduate of the University of the West Indies, from which he holds a PhD in the Economic Policy Development Program. In 2008, he was accredited as a certified financial analyst and was certified as Financial Risk Manager, FRM, in 2005. He graduated from the University of York with an MSc in Economics and Finance in 2001. He began his career at the Bank of Jamaica in 2004, where he has served as an economist, senior economist in the Financial Stability Department, and chief economist for the Economic Information Publications Department. Join me in welcoming Dr. Jide Lewis to our program. We are also joined by two amazing women in the financial industry. Audrey Tugwell-Henry is Executive Vice President of Retail Scotiabank. Audrey Tugwell-Henry, she has a combined 30 years of experience in banking with 15 plus years at the executive level and a proven track record leading retail businesses within the financial services industry. Her current role is Executive Vice President, Retail Banking, Caribbean North and Central at the Bank of Nova Scotia Jamaica Limited. In this position, Audrey has a strategic role in the overall leadership of a wide range of business areas, including retail, small business, external sales channels across Jamaica, with oversight for retail and small business. Audrey has a diploma in education from Church's Teachers College, Mandeville, Jamaica, a BSc in Management Studies from the University of the West Indies, and an MBA also from the Mona School of Business. We are also joined by Claudine Tracey, Group Chief Strategy Officer at the JMMB Group Jamaica. Claudine Tracey is a very, very experienced Chief Strategy Officer with a demonstrated history of working in the financial services industry. She's skilled in product development, risk management, strategic planning, business development, and research. She holds a Bachelor of Science and Masters of Business Administration focused in banking and finance from Mona School of Business and Management, which is complemented by certification in international risk management, and she's also an accredited director. Ladies and gentlemen, join me in welcoming our three guests this evening: Dr. Jide Lewis, Audrey Tugwell-Henry, and Claudine Tracey. Welcome all.
Hi, good evening.
And we know our it's good to have you. We know our viewers are very interested in understanding how can they get their banking done, their account opening done easier. Quite a few of our MSMEs indicate that they are unable to access particular services from the banks because of the significant requirements for know your customer. And I know we've been talking about simplified due diligence, low risk, and now with the changes to the Proceeds of Crimes Act and some of the guidance provided by that statute, we're technically in a better position for simplified due diligence. So, Dr. Lewis, let me start with you, because I think it would be good for us to just kind of lay the foundation of what is tiered KYC on the one hand, and what have the changes been to the Proceeds of Crimes Act. So you know how it go with the internet already. So while we get Dr. Jide back, Claudine, I think we have you. Claudine, so you are Chief Strategy Officer at JMMB, and I know JMMB has been doing quite a bit of work around simplifying the process for opening accounts for your customers. Can you just, from a financial institution perspective, how are you seeing simplified due diligence at this stage of the game, and how do you think our financial institutions are warming up to this concept?
Okay. Well, the truth is that I love the title of this cast, Game Changer, because I believe that's how most banks see this. We really see it as a game changer. Certainly that's how JMMB sees it, because the truth is that onerous KYC requirements really and truly has been a very long-standing pain point. A pain point for the banks, a pain point for the clients. One of the things at JMMB is that we're big on client experience. So we want to make things very easy. We want to make things enjoyable. We want to make things empowering for our clients. And there's nothing easy and worse, nothing enjoyable about how the current modus operandi is in terms of account opening. Yes. So it's really a welcome change. The fact is that KYC comes at a real cost for the banks. Mm-hmm. And so from that perspective, it really will, bring opportunities for efficiencies, which should also be down to the benefit of the client as well. So it's a win for the clients, it's a win for us. And, we have been always looking for ways to simplify our onboarding process. We've been doing some work over the years. This significantly changes the game for banking.
Yeah, thank you for that, Claudine. Audrey, we have you back. Audrey, looking lovely there in the evening too, in your Scotia red. Audrey, you've heard what Claudine has set out, that the banks, the whole game-changing aspect of this simplified tiered KYC, that it really opens up what bankers are able to do for customers. Because, some of your customers will think, that the reason why you're asking all of these questions is because you don't like me and you don't want me to open an account at your institution. So from a Scotia perspective, how are you viewing this game-changing amendment to the legislation? Not hearing you, Audrey.
Sorry, I was on mute. Claudia, the feedback in the sound. So we're the first bank to really break out and launch a product for in support of tiered KYC, and that product is called Scotia Care. And we were very happy to have the opportunity to launch a product that has a simplified KYC for onboarding. What we have done is, shortly after the regulations were changed, we had already started to look at what are the opportunities and what we could do. And with the onset of COVID, we accelerated our actions and quickly established a product that allows the persons receiving government payments for COVID to be able to establish an account by simply providing a government ID and their TRN, plus, of course, all their personal account information. And that will allow persons to have access, if they didn't before, to the banking system. The reason we did that, obviously, is we are very much supportive of the government's financial inclusion thrust. But more so, we saw the need to support the government's efforts to electronify the COVID payments. Now, this account will also be used for other government payments and not just the COVID payments.
Okay. So, Claudine, when I've heard both yourself and Audrey kind of just lay out where both your institutions are with tiered KYC. When our viewers who are business people who are watching, and this very week I heard from an SME who wanted to open an account and said it was easier to keep the money under their mattress because they still found it very difficult. So one of the things I'm wondering is, in terms of how quickly financial institutions are reacting to this game changer, how quickly are you really reacting to this game changer? And are your frontline staff aware? Because people are kind of coming now and saying, but me hear about some tiered KYC, some changes. So how you still ask me for so much things?
Well, certainly there are some banks that were quicker out of the blocks than others. So Audrey, I really congratulate BNS for really pioneering for the rest of us. But as I said before, we are always looking for opportunities to make things simpler for our clients and our MSMEs in particular. You see, the truth is that Audrey spoke about the care distribution and the support that, an account or simplified due diligence brings to that. The truth is that I believe all of us as citizens, our hearts really dropped when we saw when the first tranche of the care grants were being distributed and the long lines of our Jamaican citizens standing in the sun, waiting to go to a remittance agent to collect the physical cash because they didn't have a bank account. No bank with a right sense of mind would stand by and not want to act, particularly when we saw that coming to our head. The fact is that I believe as an industry, we can't bury our heads in the sand. We have to innovate, we have to make a difference. And the truth is, it's not too late to make a difference. JMMB, JMMB in particular, we're coming out with our simplified due diligence account very, very, very soon. And so it's very likely in a couple of weeks that will be out. We're also taking a more holistic approach in looking on all our products and services. And so you will hear more about that as well in due course. So I feel like the banks are stepping up to the plate as we rightfully should.
Okay, thanks for that, Claudine. And we are joined again now by Dr. Jide Lewis. Dr. Lewis, are you hearing us well?
I'm hearing you. I hope you can hear me.
Hearing you well. Great to have you back. So because I see Michelle Toyloy Carter asking, how does the BLJ ensure the banks are adhering to the requirement? So I know our viewers want to understand the BOJ's perspective on tiered KYC and where we are at now. So let me hand over to you, and I think you have some slides that you'll take us through to just kind of lay the foundation of where we are at.
All right, so on the POCA, financial institutions are required to undertake the necessary measures to understand their customers. That's all KYC is. Financial institutions in providing financial services to customers need to show, do the due diligence to show that they understand the customer that they're onboarding. And how else are you going to understand that customer unless you collect information? The kind of information that you collect is going to be commensurate with the risk profile that you have for that particular customer. So if, for example, a financial institution has deemed that a customer segment is low risk, they can collect less information. And that's what the amendment to POCA now allows. It allows for DTIs having done a risk assessment to then determine the level of information that they will be collecting on that customer. So what qualifies as low risk is probably the question persons are asking. For an individual, it might be that the customer has been at a particular address for an extended period of time. The source of funds are very clear. It's coming from one employer and it's a fairly stable amount. And the income doesn't fluctuate much, give and take for seasonality or bonuses, etc. For customers, it might be that the price and the revenue numbers that that come from the company are pretty simple. It's a very simple business model, and therefore the DTI, the financial institution, will deem that this is a low risk customer. The address is known. They can locate and understand that business. Purchases match the business needs. So those are examples of what low risk customers would look like. And therefore, if a financial institution in doing their due diligence determines that this is a low risk customer, then it puts them in a position to then not ask for the 20 pieces of documents that they may have asked for 12 months ago. In that case, they may just need, for example, a TRN, maybe a company ID, and that sort of information. A critical piece of information, however, that we'll never move away from is understanding and verifying the source of funds in the account. Because recall that under POCA, the critical issue is that financial institutions have an obligation to ensure that the funds that are going through that account are not gained from illegal activity, gang-related activity, drugs, all of those kinds of things. So financial institutions have an obligation under the law to make sure that they understand their customer. That's what KYC really is about. Do I understand my customer that I have brought into the financial institution that I'm offering financial? But even if there were no law, fundamentally, how else does a financial institution provide quality services unless they have an intimate knowledge of that customer? And so even beyond POCA, or just giving good customer service.
Okay, so while we get Dr. Lewis back on, so what we just discussed, we looked at the potential qualification of what a low risk customer is. Claudine, you mentioned, and both yourself and Audrey mentioned that the banks are now looking at low risk account. Audrey, you've already developed a low risk account for your customer care account, and so what we are seeing with the amendments to POCA is that there's still a requirement because you still need to know where people are getting the money from. Okay. The long list of requirements, because we're seeing that POCA is saying you really only need one piece of identification for a low risk person, and then it identifies who are the high risk persons versus the low risk persons. Now, when your customers come in now, because as persons are educated about who is low risk, and a customer comes in and says, listen, I don't have any political affiliation, I just have my little business here, this is how I collect my money, this is the kind of thing I have been doing all along. And in fact, I can show you, because you know, sometimes we're asking for excessive financial statements and some of us not reach there yet. So when a business person comes in who is technically low risk, how are they easily identified by your frontline staff as low risk? And are people now coming in and saying, why do I need to provide all of this when I don't fall in high risk? Audrey, let me start with you.
Okay, thank you for that, Rochelle. So our Scotiacare Access account is today geared towards what we call retail customers. So that's individuals. And that was fairly straightforward for us. Risk management is a core competence for Scotiabank. So when we reviewed the amendments to POCA, we were able to make an assessment of, as Dr. Lewis said, what are the key elements. For the Scotiacare product, the source of income is very clear, the government of Jamaica. Yes. And so we expect a certain volume of transactions and transactions of a certain value. So that was the determination. If we look at it on a broader scale, we do have, first of all, our frontline staff are thoroughly trained on AML and know your customer requirements. And for us, know your customer is, as Dr. Lewis says, it's not a rudimentary ticking of boxes and taking information because the BOJ says so. One of our core values is integrity, and we operate under a strict code of conduct within the bank, in addition to the regulations within the countries that we operate in. So our employees are highly trained in onboarding our customers. And what I mean by onboarding, that is establishing the customer relationship. And we do have structured documentation that will allow them to go through the process to capture all the customer information. And that is, to Dr. Lewis's point, to assist us in making a clear determination: who am I dealing with? Who is this individual? What is their source of funds? And how can I help this customer? What are the needs? So we do have very tailored documentation to capture that. As you mentioned about political affiliation, there is a need to establish that. So we do have training around that. And that's not to say if you are politically aligned, the banks will not open an account for you. But we tend to bucket certain types of activities because those fall under international standards as well as local regulatory standards for AML. So we do have very structured forms to take our clients through, and our fundamental objective is simply to know and establish, both for business purposes and regulatory purposes, who I'm dealing with.
Yes.
And so then we also have account monitoring, where we then know, based on who you are, what you said your income flow is, what type of activities you are engaged in, then we expect to see that coming through in the way you operate your account. And if we're seeing that your circumstances are changing, then that's an opportunity to have a talk with you, not again solely for KYC purposes, but also to establish how can we serve you better.
Okay. I am liking the direction too that you're going, and we have Dr. Lewis back, but before Dr. Lewis jumps back in, Claudine, you are Chief Strategy Officer, so I know you have to look at the risk side, the compliance, and how that all affects how you're going to be growing the business. And I'm actually seeing a question here from Andrew Higgins to define the term risk, because we're going to be using that term throughout our conversation. And from a banking perspective, but you know, sometimes when we hear say we're high risk, we're low risk, or how the bank determines risk, it just sounds like high science. And I know, Claudine, you're very good at just kind of breaking things down. So what is this risk that banks are looking at?
Well, risk at its basic fundamental is uncertainty. Where you're not sure, and you have to now verify or put things in place that you can be absolutely sure about something. And in the case of KYC, as Audrey laid out very, very well, when we onboard a client, we have to be comfortable, and the regulators have to be comfortable that we are fairly certain that our clients aren't engaging in financing terrorism or nefarious activities, anti-money laundering, etc. So the extent to which, and Audrey brought in the monitoring aspect, which is actually the more crucial aspect, where we pick up trends where our clients may be operating outside of what we would be expecting them to operate. That's an opportunity for us to kind of check in and say, hey, what's happening, what's going on, not from a regulatory, punitive standpoint, but to better know how to serve the client. Perhaps they need to be they need to be channeled to another product or service. Perhaps we need a little bit more information so that we can better serve them. So risk is really about, reducing the uncertainties and making us fairly comfortable with serving our clients.
Okay. So, Dr. Lewis, from the BOJ perspective, because the financial institutions still always refer to the BOJ guidelines and how the regulator is seeing things like risk. I noted on this slide that you were on, it mentioned low risk individuals, low risk businesses, and it also mentioned low risk accounts. If we can just go back to that slide, and then you could take us through the rest of your slides.
Okay, well, in terms of low risk accounts, it's not so much that they're going to be low risk accounts. It's that the financial institutions can put in measures that help to manage that risk. So, for example, if they onboarded a customer and designated that customer as being low risk, and say the customer said they would be only the inflows to that account would be $20,000.
Yeah.
The bank organized in such a way that the maximum balance in that account is 50, such that so that way there's a mitigant in terms of the amount of funds that will be flowing through that account because of that feature. Or, for example, it could have a measure using technology again in terms of the number of transactions that can go through an account in a given period of time, whether it be a day or a week or a month. The limiting of cross-border transactions. Cross-border transactions tend to be a little bit more high risk in nature. And I need to qualify this because, of course, in Jamaica, remittances are a big aspect of our day-to-day lives in Jamaica. Yeah. What would they be looking for example, is remittances that are coming from a single source, a definite source in one location with a fixed amount, generally with kind of fixed periods of time. That's the kind of behavior that would comport with low risk. And of course, the bank can simply manage that by just not allowing cross-border transactions and limited access to the funds. So these are the account section of this slide is really speaking to the kind of mitigations that a bank can do to manage that uncertainty that was spoken about earlier.
Okay. So in regard to what the actual requirements are now, things like the just one form of ID, and collecting only basic information and basic business documents. Can you talk to us a little bit about that?
Well, yes. So, I mean, if the entity financial institution has done the due diligence and determined that the customer is low risk, it may very well necessitate that in that case, the entity would just require, for example, an ID, from the company, maybe a TRN number, some sort of verification from a third party. So let's break it down. If it's a helper, for example, it might just be a job letter from the employer saying, I am going to be paying this person $10,000 a week. And so that is what the entity would be able to rely on for a low risk customer. In the case of a small company, of course, you're still going to need some idea as to some financial statements. And I know you spoke about that on your program and you had lots of hits on that. And that's just so that the financial institution can understand how the revenues are being generated. And then they can corroborate that revenue generation is consistent with the business model that the person who opened the account indicated it would be. And so there's nothing more or less than that that would be required in the case of a simplified due diligence.
Okay. So, ladies, I am seeing a very interesting comment here from one of our viewers. And our viewer is saying, listen, I want to mention the specific issue preventing MSMEs from opening a business account. And an example he gives is the disparate treatment of MSMEs. So there is a belief sometimes with our business customers that they are treated differently and that their requirements are so onerous. In terms of the simplified due diligence under POCA, what changes are you making in your tiered KYC structure to accommodate this? I mean, are the all these financial statements still required? Because I'm seeing simplified due diligence would just require the dates of incorporation, etc. And you could limit the kind of transactions that the particular account is doing, so that until the account moves into another state where more money coming in. So I'm just wondering, what are you doing for people?
So for us at Scotiabank, we have taken the first step with our retail customers as we continue to work with the central bank through operating guidelines and so on. Then we will make further moves towards establishing, and it is more in this case a tiered KYC, tiered know your customer for business customers. But today, just recently, it's only about 2 months, 3 months, 2.5 months to 3 months since we have launched the Scotia Care, and the experience has been fine. We are able to determine the important things, who we are dealing with, what's the income flow, and so on. So once we have taken that step, and as we work with the central bank through the guidelines, the BOJ guidelines, then we'll be able to establish products or a product for a small business account. I can't say if we'll get to the corporates with the simplified KYC, but corporates tend to have established relationships. And so once you have established that relationship, it's just adjusting as you go along. But you can appreciate that a business is more complex because a business persons, and you need to know who are the end customers, and we have to be able to follow the whole trail of the operation. But certainly, working within an environment of a tiered KYC structure is of significant value, not just to the customers, but to us as the bankers as well. And it's important to us at Scotiabank as well, because the fact is that a customer onboarding comes at a significant cost. And so we want to be able to efficiently manage that cost and direct our resources to where we actually need to apply full KYC. So we're quite open to making that next step, to starting to examine business accounts or small business accounts. We're not quite there yet, but obviously that's next on the chart for us.
Okay. So Claudine, from the JMMB perspective, I know JMMB has an SME resource center. And how is the resource center utilizing something like tiered KYC? And for our viewers, just like tiered KYC, and we're all not exactly sure what we're talking about. So it's tiered know your customer. The recognition that within your customer base, there are persons who are low risk, those that are medium risk, and those who are high risk. Accordingly, the type of due diligence that is required for the different types of customers would differ. So you can have simplified due diligence for your low risk customers, and then you have a kind of reasonable medium due diligence for your medium risk customers, and then for your high risk customers, you'd have enhanced due diligence. So what we're seeing is that the legislation is supporting this tiered view of customers, which is really a game changer, allowing a lot more of our unbanked citizens and businesses to become banked. So Claudine, from the JMMB perspective, what is JMMB doing in regard to the business customers?
Okay. Well, I know as many of your viewers would probably know that JMMB is aggressively, or I should say passionately, moving into the SME space. And it's the beauty of us taking, being able to create, the end in mind that we want, literally almost from scratch, is that we could address the pain points. And, the KYC aspect is one of the pain points, but there are many other pain points that complicate life for SMEs and for onboarding SMEs and lending to SMEs. And so we were actually doing a lot of work in that regard in terms of setting up ourselves, redefining our risk appetites, changing our risk assessment models, to make it, and this is a PSOJ word, a Nevada word, fit for purpose for SMEs. And a big part of it being fit for purpose is making the process very, very simple and very, very easy. So you mentioned about our SME resource center. So we have a resource center whose only purpose is not to book loans, but it's purely just to support our SMEs, to literally handhold our SMEs and provide them with support and guidance and coaching and connecting them with business development partners in the ecosystem, etc., such that we're able to onboard them easily. We're able to truly, this is where KYC really becomes know your customers. We're truly able to know our customer, because the truth is, one of the reasons why financial institutions traditionally have required so much information from our SMEs when they're trying to establish business for us is because, in the past, SMEs were these strange creatures to us. We knew how to bank retail customers. We were very comfortable in the corporate banking space. But when it came to these unicorns named SME, we weren't really properly set up, and we did not know what, exactly, how to deal with these businesses. And so in taking the time to understand the businesses and taking the time to really know our customers when we're onboarding with them, such that we can partner with them, makes the process a lot more simpler, and it becomes less about checking a box for requirements and more about a partnership and what do we need to provide to each other in order to support the growth of the business.
Okay, thank you for that, ladies. And in fact, I see Michelle Toyloy Carter says here, very assertive action from both entities. And I think our viewers, it's important that we have these conversations, because sometimes we think that the banks are sitting down and actually not doing any, conducting any assertive action to move the things forward. So it's really good to understand. Dr. Lewis, in terms of the BOJ support of the tiered KYC and the relevant guidelines, education, etc., to support it, what is the BOJ doing in respect of these changes?
Well, so that's a very good question. We have been in writing to the DTIs earlier this year, back in January.
I'm hearing you.
Are you hearing me?
I want to just make sure we all know what we're talking about. What are DTIs again?
Deposit institutions. Thank you very much. Banks, financial institutions that accept deposits on behalf of customers and clients. And so we wrote earlier in the year, just essentially advising them of the change of the law. Granted, that was a public gazetting of that. But we wrote to say the law has changed. We have indicated that we are aware that the change of the law now supersedes our guidance that was issued to the industry last year in relation to what our expectations are. And so we've been having the discussions with the industry. We're at a point now where we want to have dialogue with the DTIs in terms of what our expectations are. And particularly, we're going to be in writing so that there's no ambiguity about what the central bank's expectations are. And there are really just three expectations. One is that they risk profile their customer base. Two is that they then apply the appropriate due diligence to that assigned risk rating for that customer. And then three, that they go through and have a mechanism, policies and procedures that allow them to track the behavior of that particular account over time. Such that, and this is very important, so I'm going to say it very slowly, someone can be onboarded with a financial institution as low risk, and therefore require only a few documents. But if their behavior over time suggests that they're medium risk or high risk, then it could be that the financial institution will reach out to the customer and ask for more information. Why more information? So they can have better understanding. The better the understanding is the better the management of the risk, right? So I think that's a critical thing. So it's not just a one moment in time activity. It's a relationship. It's a relationship between a customer and a financial institution. And we want to make sure that both parties get the best out of that relationship, right? And so that is what it's really creating that ecosystem. The change in the law allows now for financial institutions to therefore customize their collection of information to the risk rating of that customer. So we'll be in writing and dialogue with the financial institutions so that they understand what our expectations are in relation to how to go about implementing this tiered KYC. In the case of banks that are already doing savings and deposit products and there's no change, there's not going to be any need for them to write to the BOJ to get any approval or non-objection. If it's a simple case of a deposit account or a loan account, absolutely not necessary. If the financial institution, however, is innovating and coming up with new payment products and new types of financial instruments to meet specific needs, then in that instance, they would then need to write into the Bank of Jamaica for our non-objection. And so we'll be definitely outlining what those expectations are over the next couple of weeks. And usually our approach is to have discussions first so that we have a meeting of the minds and setting up the expectations. And then we put, as they say, paper to pen and make sure that we're all on the page.
Yeah. Thank you for that, Dr. Lewis, because, you know, we did call today's episode Game Changer. And, you know, in terms of this game changing, what tiered KYC, how you're able to approach your customer now can give you a kind of advantage now because, you know, say people like to be treated well. And if you're able to structure from a banking perspective, a relationship, because it's a relationship, you know, when you're with your bank know all of your business. So how that relationship is formed and fostered over time is really now facilitated greatly by this entry point through the tiered KYC. And both ladies mentioned monitoring, that at the end of the day, it is not just the opening of the account. There is that continued, and monitoring is not just checking into people's business. It is also checking on your customer, that relationship with your customer. What is changing? That, you know, you probably need a different facility. Have you started looking at those? And I'm seeing a question here from Robert Gordon. Robert says, the CRIF Credit Bureau is, in fact, that's another question they may look for. He actually asked a question about whether or not the banks are utilizing the services of the credit bureaus as a part of the meeting their KYC requirements.
Rachel, I would say not necessarily. Today, we're largely using the credit bureaus for the purpose that it was designed for, which is to have some insights into the credit conditions and standing of our customers. So we use it for KYC purposes. But I also wanted to add that I don't want us to frighten our customers in this conversation when we talk about high risk and low risk and so on. The fundamental thing that we do as banks is we offer a financial service. And in offering that financial service, we have certain obligations to all our depositors that we enter into all interactions with full knowledge and clear knowledge. So that is part of why we need to know our customers. We also, and I'm speaking specifically for Scotiabank now, also take our responsibility to ensure that our client interactions are in line with the local laws at all times, whether it's based on international standards for AML or international standards for terrorist financing, whatever it is. We do have that responsibility, as Dr. Lewis said, and we take that responsibility seriously because lives are impacted when illicit transactions occur.
Yes.
So we do not want to be a part of that. And again, I like to emphasize that for us, it's not ticking off boxes or saying, yes, we have done it. But at the end of the day, we don't want to scare our customers because when we onboard a customer, as I said before, it is really with the intention of adding value to that customer's life and to ensure that we can support the customer in meeting their financial needs. So we do it when we're asking questions. We're asking questions for a purpose, and it is really to get to know our customers, so that we can offer the appropriate products and services. If I were to use a simple example of a credit card, if you give a customer a credit card, a basic, what we call a Visa Classic card, and the customer now has a new job, they started out as a young professional just graduating from college, and then after 5, 6, 7 years, that person is now fully entrenched in their profession, and now we are seeing them hitting that limit and repaying rapidly and hitting and repaying. We recognize that maybe through behavioral analytics, this is time to offer this customer a new product. So I don't necessarily want to scare our customers into thinking every time we call them, we're calling them because we think they're terrorist financing.
Yeah, because we don't want it, because we get afraid. And I see Claudine nodding because Audrey, you just mentioned something important, that a customer would have opened a bank account probably in their first job, and then they call and you probably give a little more credit card thing, limit on it and thing, and we get all one card with a different color. No, I want to bring in Claudine on this one, because now when you switch and become a full-flung SME, and that status of the 25th of the month paycheck has changed and you are now running a business, what our SMEs are saying is that the same kind of ease of doing business, I'm not receiving it as a small business. So I was able to get a lot more things when I was an individual working, and know that I'm launch out on the entrepreneurship, it is more difficult. And in fact, I have to be using my personal credit card because I can't get a business credit card. But let me start with you. What kinds of things can our customers expect to see change? I mean, COVID has changed us all, so we're so digital now, so even the need for the credit cards is that much more to conduct business. What difference will our customers be seeing?
Well, I mean, the truth that scenario that you painted is such a big pain point that SMEs complain about all the time, that you can be so quick to get get a loan to buy a car or to even buy a carnival costume, but you can't go to the same bank and you can't get money to invest in your business and build the economy. And so, and that was part of the re-engineering and the restructuring that for JMMB in particular that we had to go through to completely change and modify our risk adjudication models, that we get to know the business so intimately that we can understand the business, understand the needs, and then tailor credit solutions or other solutions to suit those needs. And you said something as well, I think Audrey was making the point about, the client graduating, starting at this stage and then going to the next. I mean, it's really about a life cycle approach, whether to individuals or to SMEs. So SMEs will come into us, they start, the early stage, and then we grow with them. That's the intention, that we partner with them through different phases in their life cycle, straight up to growth, straight up to maturity, where the solutions and products will change, but what won't change is the fact that we have been partnering with this individual. So it's really about the relationship, and that the know your customer thing is not about a test that you have to do. In fact, at JMMB, when we onboard a client, and I feel like I need to wrap up now, when we onboard a client, we go through what we call a financial planning conversation, where it's really in the conversation we collect those the quote unquote KYC information. Sometimes clients don't even know that's what we're doing because we're just having a conversation with them and getting to know them.
Yeah. So thank you for that, ladies. Audrey, you wanted to just make a quick point?
I wanted to jump in because I really want to just quickly kind of break down this dynamic of the SME versus the consumers.
Wow.
The real issue is information and access to information to understand the client's business. What we've been doing at Scotiabank, we have for the last 8 years something called a Vision Achievers program. And in that program, we have coaching for 25, 30 SMEs. And what we're trying to do is to help that SME to bring that information forward. First of all, to understand the information themselves. With that A retail customer, they get a pay slip, you understand their income. The challenge as bankers that we've had, and I would say for the last 40 years, is understanding the income, understanding the financials, understanding the business of an SME. And I know, Rochelle, tomorrow there's another conversation fully on that.
Yes.
But it is very important to understand, not just when we ask for cash flow, we don't want a business customer to go to an accountant and say, I need a cash flow statement. We want the business owner to understand their flows. How long does it take them to collect their money? What are the outflows of money that they have? What's the inflow? What's the frequency? What's the timing? What's the aging? We really struggle a lot breaking that down. And I think we've come a far way as an industry in helping to what we call build capacity within the SMEs and really getting that conversation around. The only way we can do business is if we get and understand their information. I'm glad that gone are the days, and I've been in banking a long time, where people will look at you and tell you they have two books, their books and the taxman books. That kind of complexity causes the bank to be in a position of uncertainty. And to the point, when there's uncertainty, we have a difficulty making decisions and acting. So I'm happy that, as I've watched the transition over the decades, to see where customers are becoming more forthright with information, wanting to really understand their own business, their numbers, because as bankers, we work with the numbers. We also work with the qualitative part. If you drop out of the business, who will step in? What's your continuity? But a lot of times, SMEs are irritated by pulling it together. But I would say over the last 5 or 7 years, I would say I've seen persons understanding the value of knowing their business and understanding their business and understanding the dynamics. So we want to continue to work with them because we want to lend to SMEs. They're a critical part of our business as well.
And I'm glad I want to stop at that point because that's what our SMEs need to hear. And ladies and gentlemen, we have had a lot of engagement on this program tonight because the comments are flowing in. And for those of you who have not yet registered, I'm going to be talking a little bit more about this because we are continuing this conversation tomorrow at the PSOJ online conference. And I just want to wrap up with one last question for Jide. Jide, I saw one of our viewers ask this, whether the BOJ will be doing any monitoring of the DTIs to ensure that they are implementing simplified due diligence.
Okay, that's a very good question. The answer is yes. Not specifically of this particular matter. We, on an ongoing basis, do on-site examinations of our DTIs, deposit-taking institutions. And in those on-site examinations, we evaluate the extent to which they are comporting with the guidance that they have received from us and also the law. We have an interest in seeing how well this stratified due diligence methodology is being applied. We want to see that it's applied consistently. We want to see that there are mechanisms that entrench it, and that customers understand why they are being asked for certain information and why they're being channeled to certain products and services. We want that symbiotic relationship to be there. So absolutely, we have a vested interest in ensuring that the law is applied properly, adequately, and comprehensively.
And I just have to point out this last comment. Save us, Audrey, Claudine, and Jide. Save us. We are counting on you. So thank you very much to our guests. I'm really looking forward to continuing this conversation tomorrow on Game Changer Tiered KYC. We have Claudine Tracey, Group Chief Strategy Officer at JMMB Group. Audrey Tugwell-Henry, who likes to say things that she's been in the business for 30 years and she don't reach 30 yet. Who is Executive Vice President of Retail at Scotiabank, and Dr. Jide Lewis, who is Division Chief for the Financial Institutions Supervisory Division at the Bank of Jamaica. Thank you, ladies and gentlemen, for a very stimulating conversation, and I look forward to continuing it tomorrow at the conference. Thank you very much. So you keep hearing me talking about the conference, and I'm now joined by Nevada people are tonight. How are you, Nevada?
I'm good. We have a big I think it's something called chasm, crossing some kind of chasm. Anyway, no, we have our big conference. Actually, from what we were told by some people at McKinsey and IDB, this may be the first conference of this kind. I mean, in the world, that a group of people.
Well, I have been saying it is. So
it is. Yes, of course, it is. It is, because when you think of the level of people that are there, these are the true decision makers in the society. So to have everybody come to the table, both to hear, to listen, to share, and to see how we're going to try and cross the chasm of this COVID situation and get back to economic, not only recovery, but revolution, revitalization, all of that stuff. It's really, really an unbelievable time. And there are some people have said, blooded longy, but really, if you look at the list of guests and look at the list of topics, and you realize that each of these topics are critical to what happens in Jamaica. The conversation that you were just having about tiered KYC, that is part of how we're going to become a digitized society, when more people can join in the formal banking sector. So that is a critical part of what's happening. And the morning when we talk about from IDB, what has the regional response been? What are people doing in other parts of the world? What can we learn in Jamaica? We hear from the Honorable Minister of Finance talking about the shape of the recovery. Is he a jugo man? Is he an L man? Or is he a U man? What is he seeing? Is it different by sector? These are the kinds of things we want to hear.
Persons who don't understand the concept of J and U and so on. Could you just, when we say that, that's in the context of the recovery, the economic recovery. Yes.
Correct.
So there's going to be talking to us about his views on the shape of the economic recovery.
Absolutely.
Okay.
Yeah. We get the Bank of Jamaica and the governor talking about what's going to be happening with the foreign exchange. How are they going to manage foreign exchange? How will they be managing the reserves? The whole issue Keith mentioned a couple of weeks about forbearance. How do you these moratoriums and so on? How do the banks help manage all of that throughout the system? And then once we start the morning with all that macro stuff, we then start to talk about industry specific things like what's going on in tourism, what's going on in manufacturing, what's going on in agriculture. Are there things that we should be doing in agriculture now that can actually pivot and change agriculture to be sort of the robust industry that we need it to be? It's time to start feeding ourselves. Import substitution. You know, Michael Leachin is going to be talking about a lot of that area. I think after that, I have a section on pivoting. We've talked about pivoting on this program with respect to companies, but we're also going to talk tomorrow about pivoting industries and then pivoting an entire economy. Because to the extent that we have certain important sectors that will not be returning fast enough, we need to talk about, well, what do we do with those assets? How do we rethink how those industries get supported and how we can change what they actually do? And we've seen many economies around the world, even dramatic things that you don't expect them to have as industries. You know, everyone talks about Singapore has no domestic airline travel and yet built one of the largest airline hubs in the world, right? So they weren't even thinking about, and that's unheard of, because what you would expect is a country no bigger than Jamaica, right? Suddenly does a whole international airline hub where there's no domestic airline travel. But it's opening the imagination by the fact that we are now facing a crisis to see what are the things that we can do. You're hosting a few of the panels as well. Which ones are you doing?
I'm talking about, we're looking at tiered KYC. So we're continuing that conversation tomorrow, and also the gaps in MSME financing, which is a critical area. So we will be joined by the DBJ, Hugh Duncan, and Mark Tracy is also going to be talking about some of the gaps that we've recognized, even from our tracking with the MSME financing.
I see a question there from Christoph that says, on the conference, do you think it would be useful for non-business owners to come? Yes, if you are a Jamaican interested in how we are going to try and turn this economy around, you have a dead end. This is not only about business people. This is also about any thinking citizen needs to be part of this conversation. This is the most crucial thing we are facing now as a country.
Yes.
So either you have a patty shop or just work in a patty shop, this is a conversation that you need to be part of, because around the world, nobody has yet had a clear solution to this problem. We've seen pieces, and I think one of the things that he talks about why we're having this conference is that as a PSOJ, we see ourselves involved in very many conversations, but recognizing that there's sometimes a lot of piecemeal pieces and silo work. We all have to remember that this is going to require an integrated approach of public sector, private sector, NGO, multilateral, and better for us to have an aligned eye about what we're trying to do versus everybody just trying to fix in their own way, their own area.
Yeah. So tomorrow, viewers, I mean, what we are looking at, and when we say this is the first of its kind, you know, this is the first conference anywhere in the world that is looking across the gamut of considerations of the COVID-19 pandemic, but not just looking at it from the perspective of this is what has happened, woe be unto us, but this is where we are at and this is where we can go. So we're looking at what our macroeconomic indicators are, very important discussions. And some of the times, and we've talked about it on this show, whether or not you're in business or you're an employee, as a citizen of any country, you need to know how you are affected and could potentially be affected. Then we get into a very important discussion on pivoting the economy. Because we've talked about the business, well, how do we pivot the economy? So that is the kind of stimulating conversation that will help a business person to say, these are some of the areas that I could potentially go into. Then we're looking at the sector-specific issues, and we're looking from tourism to agriculture. So we're looking at the various sectors that are impacting how we live. So tourism, we've heard how important it is to our GDP, but then we hear there's an uptick in manufacturing. So we need to be looking at how we're going to make that uptick into a continued rise for manufacturing for exports. And then we're also looking at agriculture. When you're looking at the range of speakers, and Nevada, a particular area, and I think you're hosting this session, the new economy, because we're also talking about digitization. And I just want you to touch on that, because today, even in the banking conversation, digitization is so critical for our next steps as a country.
Absolutely, absolutely. So the Honorable Favour Williams, Minister of Science and Energy, is the chair of a committee that's focused on how are we going to become a more digitized society in general. Issues like broadband, getting widely available access broadband, issues like e-commerce and payment platforms, tiered KYC as part of that, getting people on board. Issues like which Innovate 10X is working on with a team. How do we create packages, simple technology packages for each age and stage of a business? So when you're a micro, what's your technology need? When you are a small business, what's your technology? And when you are a medium business, what's your technology need? So these are the kinds of issues that we are going to explore in that road to the new economy. Part of that too is the agriculture, because we have struggled with agriculture for some time. But we're going to have Michael Echin and Lenworth Fulton, broad-based thinkers in this area, both heavily invested, to talk about what Lenworth, who knows very much the history,
yes,
and Lechin, sort of more recent player, but a well-funded player, and how they see this critical thing about agriculture. Because with the disruption to the supply chain, you start to think, we should at least, at a minimum, be able to feed ourselves. The Israelis, by the way, have mastered this. Why? They live among enemies. So they know. And one of the interesting things about when you go to Israel is when you drive on the pathway, because you learn things in school like banana can't grow next to grape, can't grow next to whatever. But in Israel, everything grows next to each other, because they figured out by complex irrigation, temperature, water temperature, and so on, how to grow things even in land that is not particularly arable. So this is all of this kind of stuff that we're going to be exploring tomorrow. And also we're going to talk again about how to make working relationships between the private and public sector. We have Lloyd Diston, who has who pioneered and pulled together the stakeholders around the national consensus on crime. Very, very crucial. On the other side, we have Safri Brown, who talks about the PSOJ COVID Relief Fund and that operation that was set up so quickly, again, private, public sector, and NGO. And both of them are going to talk about principles of implementation and how we are able to make things work. Because one of the things that you and I talk about a lot is wanting to have the conference, but in order for the conference not to be just another talk shop, we have to be clear how much of the discussion becomes part of what we're going to try and implement for Jamaica as all the various stakeholders over time, because we have got to find a way out of this. Clear thinking is the start. Objectives, goals, and tracking is going to be how we get there.
Yeah, and I'm seeing a comment here, Michelle. Tyler Carter says it's even more important. No, pivoting with a pending election, continuity or change will impact these issues. Kwame says, see, that's new and also about emerging ways to strengthen our economy. So I think if you have not registered yet, I know that you're busily emailing us at sme@psoj.org. And the beauty of this conference is because it's online, we don't have space limitation, because we really want persons to be a part of this conversation. It's Crossing the Chasm, the Road to Recovery, tomorrow, Friday, August 14th, from 9 a.m. to 5 p.m., a very full day of discussion. Get your seat at the table and be a part of this very important conversation. So, Nevada, I'll see you tomorrow at 9. I see you tomorrow at 9. So people can still register. And in fact, if you have friends who you are busy on Instagram or so, just indicating that you're a part of the conference and they are feeling grudgeful and would like to be a part of it, please just share the email address, sme@psoj.org, so that they can be a part of the conversation.
And again, remember, anybody, right? So whether you're a small business, medium business, large business, a student, academic.
A student, yes.
This is economic history. So if you are there studying old economics, when a current problem is being faced with your country, with the leadership of your country, this is the kind of fascinating conversation that you want to be part of, that you want to listen to. So tomorrow, put out the books and start to listen actively to how we are going to try and save the Jamaican economy.
Yes. So on that note, thank you for joining us for another episode of COVIDCAST JA. Today we talked about the game changer, tiered KYC. That conversation will continue amongst a slew of other topics at tomorrow's PSOJ online conference. If you have not yet registered, again, the email address is sme@psoj.org. So I'm looking forward to seeing you all tomorrow. And please, if you have not signed up for our weekly memo, also email us at sme@psoj.org so that you can be on the list for our weekly memo. Remember, the show is available online. Take some time, look back on our previous shows, and we are looking forward to seeing you again next week, Thursday, 7:30 p.m. right here on COVIDCAST JA. See you next week.